It's absolutely absurd. People don't understand their natural advantages, and they don't use them. So that's bad, number one. But worse, number two, is if you don't think you're a good ice skater, or if you're convinced you're not a good cellist, you're not going to go out and try it. But people are buying stocks anyway. They're not discouraged, they just think it's a gamble. So therefore they go forward and they bet on one stock for a week and a half, and it goes up, and they make $2 on it. Then they sell it and they buy something else. When 3 years is over, all they've done is generate a lot of commissions. They've probably lost money. That's a mistake.
So your advice is what?
If you don't understand a company, if you can't explain it to a 10-year-old in 2 minutes or less, don't own it. Because when it goes down, let's say the stock goes down 2 points.
You won't understand what's going on.
What do? Do you buy more? Do you flip a coin?
And chances are your broker doesn't either?
He or she certainly doesn't know about it. I mean, who knows what all these things are at auto back planes and mega flops? Who knows what all these things are?
So buy what you know.
Buy in your industry, buy what you know, buy local companies.
Yeah, so suppose you don't have an industry. I mean, you don't really...
You buy local companies, companies in your own industry. 10 years after Walmart went public, 10 years after
Walmart.
10 years after it went public, it's a 25-year-old company now.
Right.
You could have bought the stock and made 50 times your money on it. 50 times.
This is, if you bought it 10 years after
it was public already.
Yeah.
It already gone up 5-fold. So you could have made 250-fold. But I'm saying, let's say you were in a town, they came into it and they said, boy, these prices are great, they're doing terrific, I like the bargains, and you checked it out. You spent a little bit of work on it. I mean, people are very careful. When they buy a dishwasher, they do some research. They'll put $10,000 in some stock they hear on a bus. So if you did a little bit of research, you say, Walmart's in only 10% of the country. They're not even saturated there. Why can't they go to the rest of the country?
So is this is more of the same? Is it what it is?
It's more of the same. Plus, I show examples. It's a touch more detailed. It actually shows me in action. Right. I picked 21 stocks early in 1992. Some work, some don't. I follow those companies. Some of the companies, the fundamentals deteriorate. Some they improve. I watch those companies go through the year. I also explain the retailing industry. I try and make it very simple. I talk about a wonderful example. Is a 7th grade class. The teacher of that read my book, and my first book that you were talking about. You and I did a show on that in Washington. You remember that show? This is a long time ago. She read the book, and I said, if you made it through 5th grade math, you can do it in the stock market. She says, okay. She started teaching it in 7th grade class. These kids had to study companies. They had to look at their balance sheets to see if they're solvent. And they picked stocks. These stocks were up 69% over 2 years when the market was up only 20. And they picked stocks like Limited, they picked The Gap, they picked Walt, they understood these companies. They also picked IBM. I lost money on that too. I mean, everybody makes mistakes.
Everybody did, yeah.
But I'm saying this was a school, St. Agnes' School in Arlington, Mass. But in addition, in the decade of the 80s, there's 8,000 investment clubs. These are amateur, sort of average people just investing. These investment clubs, 62% of them, of these clubs, beat the market. In the decade of the 80s, only 25% of professionals beat the market.
Let me go back to one other subject. You're coming back to Fidelity, aren't you? Aren't you going to do something?
When I finish this book, I've been working about 1 or 2 days a week the last year and a half on this book. Now I'm done with the book. I'm going to go back to maybe 1 day a week, working with the younger analysts, just listening to them, talking to them. I'm not telling them to buy Xerox,
so you're not
to sell Xerox.
your old lifestyle.
Not totally. I'm not going to run another fund. 13 years is plenty of running a fund. I'm just going to work with younger analysts, let them ask questions, I'll ask them questions. It's going to be a lot of fun.
And do you still follow, do you manage any money for anybody other than yourself?
No, I manage money with other people for some charities. But no, I don't manage anybody's accounts.
You're not doing some mutual fund,
no,
some pension fund, some
nothing. I'm out.
University
cold
fund.
turkey.
No. All right. Cold turkey, did you?
Cold turkey.
Now, are you happy you did this? I mean,
obviously delighted. It's great.
And you like your new life?
Oh, it's fabulous.
Right. Yeah. Let's talk about the Clinton economic plan. What do you think of it?
Well, I think his theories are excellent. We clearly.
Which theories are excellent?
Well, he claims that we're going to do more investing and less spending.
Right.
And that statement you can't argue with.
Less consumption, more saving.
You absolutely have to invest more in education. You have to invest more in companies. You have to invest less in just spending money. I mean, today people are encouraged to spend. You spend money. Let's say you put an addition on your house. You spend money on that. You can get a tax deduction because the interest on it is tax deductible. If you invest, if you take your money and put it in the bank, you're taxed at a very high rate. They have this incredibly unfair term. It's called unearned income. Every time I do on income taxes, and I fill out the number for what you made, the money you put in the bank, and it's called unearned income. It's an insulting term. But anyway, if you buy a stock and you make money on it, you pay a 28% tax on it. Guess what the capital gains rate is in Japan?
capital gains rate in Japan is 10%.
Zero.
Zero.
I mean, we're not encouraging people to save. We're not encouraging people to invest.
So
we're encouraging people to spend.
You're in favor of the elimination of the capital gains tax that Bush proposed?
Reducing it or eliminating it. And I'm glad that Clinton didn't raise it. I mean, he raised other taxes. This fairness thing, I understand.
And what about this tax the rich business? You buy that?
I think fairness, it's a debate what's fair. I certainly think raising taxes is appropriate if it's at the same time you cut the spending. It's a lot easier to raise taxes than cut spending. If we can cut spending and get government's share of the gross national product reduced, it'll be fair. But our country works very well. It's working extremely well. I mean, you just don't want it to spin out of control.
You don't buy into the stimulus package, though.
Don't buy into that at all.
You believe that we don't need to go out and create jobs
Charlie,
for people.
we've had 8 recessions since World War II. We've got out of every one of them. This is number 9. There's nothing unique about the system. We'll get out of this one. In the decade of the 80s, the 1980s, we had 18 million jobs in the United States.
Yeah, but as soon as you say that, as you know, people are saying, yeah, Peter, but look what we did. When Ronald Reagan came to the White House, the deficit was what, $70 billion, $65, $70 billion, and now it's approaching $350 billion. And the amount of money that we have to spend to pay off the interest on that debt is saddling us and destroying us and destroying what
You're right. I agree. You're right.